You are listening to chartingwealth.com for Tuesday, the 20th of December 2016. We have a new chart, lots of new fascinating things that we have adopted for you as the market was up over the course of the day. On the first day of this last week, we're going to be seeing before Christmas. And what do we actually have going on? Well, I'm going to go through the chart and tell you about some of the changes we've made. Christmas has come early for you. We've geared things up a little differently using our vertical crossover lines, which helps you follow even better things that are changing in trends so that you can find great jumping in points. We have green lines that dictate certain things, blue lines that dictate certain things, and then yellow lines that dictate certain things. And when we start seeing repeats, they tell us all sorts of things to do, and we'll talk about that as we move along. Now, if you've not already listened to the training that we put up today, on Monday, as we're taping this broadcast for Tuesday, you need to go to the website chartingwealth.com or the YouTube channel Charting Wealth and check out vertical crossovers. We've got a great training for you that we did at the end of this last week. So let's jump right into these charts. You will notice that we no longer have IYY, the total market. We're just going to be looking at the S&P 500 and the Qs, the NASDAQ 100. Then we're going to look at bonds. We're going to look at the 20-year bond, TLT, and we're going to look at gold. We wanted to find something that shook things up a little more, gave us some more opportunities. When stocks are falling, bonds might be going up. When bonds are falling, stocks might be going up. Gold is going to be somewhere in there. We just never know with gold, do we? So let's talk about what's happening in the world today. The S&P 500 was up technically 0.22% for the day, but as we look at our Heiken Ashi candlesticks, we see that we really have a sideways slide going on. We can see that our MACD has actually gone sideways on us. It has really stopped a lot of its upward movement. The PPO, the price percent oscillator. What do we see going on there? Well, we actually see that the price percent oscillator is pretty much moving along parallel and not going up to the extent that it was before. We have two candlesticks that are red. We have the first day of the newest candlestick that will be completed on the 20th of December, and we have the last candlestick of the week on the 16th, which again was an open red box candle. We've not had any movement above Thursday's price action since that time period, so we're slipping sideways, losing upward momentum. Derivative oscillators losing its energy. What do you think the 2-hour chart is going to look like? And again, 2-hour, what are we talking about? We've given a lot of thought about when to use what charts, and we have decided that we're going to flip over to the 2-hour chart to give you a little bit quicker entry and exit points when trades present themselves. And what do we see going on? Well, we had a crossover going down at noon on Wednesday the 14th, and we've really seen the market trek down since then. Now, it was up for the day technically, but again, it started where it had fallen to on Friday and just sort of slid sideways and a little up on Monday. So not that much movement. That's why our average pace Heiken Ashi candlesticks are showing us what they are as to what's really happening with price movement. We do see, however, that perhaps it's hit a bottom and may be crossing over going up on that 2-hour chart. So we'll continue to watch. Now, what happens if indeed it crosses over going up? Might be a decent entry point, so you might be watching out for that. You might be watching out for that over the next day. So just be aware. We'll see, because we do have our weekly chart and our 2-day chart are both in confirmed uptrends. And what's interesting about the way we are now using our vertical crossovers, you can see that we started with the 2-hour chart moving up, crossing over all the way back on the 7th of November. Then we had followed by our 2-day chart crossing over in November. And let's see, that date was the 10th of November. Then we saw later in November, around the 28th, the weekly chart crossed over. Now we then saw a retracement, and where our real safe power move occurred for jumping into the market was when the 2-day chart recrossed going up. I'm sorry, the 2-hour chart recrossed going up, and that was back at 2 p.m. on the 5th of December. If you had jumped in then, my friends, and stayed in until it crossed back over, what kind of movement would you have seen? Well, let's look. The highest, worst spot to have bought in after that crossover occurred was at $21.03. How high did it go if you would have gotten out after the peak occurred? Well, $26, $25, roughly $26. Not bad for about 6 days, is it? So again, this is what we're talking about. We're talking about trend following, where trends have been established. Now we're getting long in the tooth on this uptrend, much safer on this second upward spike when we saw a green, and again, we like to see a repeat, and we'll start setting up these rules and making sure you understand what we're talking about when we start talking about using these vertical crossovers, but very helpful in assisting you in visualizing just what is going on. Okay, that's where we are on the S&P 500. If you've not listened again to our vertical crossover training, please do that. Now we're going to move to the Qs. QQQ, what is that? Well, that's the NASDAQ 100. What do we see going on there? Well, we're really not doing any trading in that at this point. Why? Because our weekly chart has still not crossed over, going up in the same direction as our 2-day. Does appear to be getting closer. Once that occurs, then we will feel good about jumping into a weekly up move, but that's not happened yet, so we are not making those moves. So let's continue. And again, we want to find charts that work. When they work for us and they meet our parameters, we look to trade them. What do we have going on TLT? What is that? Well, that's our iShares Barclay 20-year Treasury bond fund. It has continued to move down. It's in a confirmed down move on the weekly and the 2-day chart. Crossed over going down originally on the 2-day chart back in July, then crossed over in August on the weekly chart, and then crossed over again on the 2-day chart back in the month of, let's pull that in a little closer, in October. That was your premium safest jump-in point for that down move. An inverse bond fund like TBT, you would have done so well writing this down. Where is it now? Well, could it be crossing over, going up? Could this portend? Not yet, because remember, we're still in a confirmed down move on the weekly and the 2-day. But if this 2-day drags the weekly over, then maybe we'll see bonds recover a little bit. We'll just have to wait and see what we see. But we'll continue to monitor bonds, and it's our new chart that we are looking at. It has replaced the total market. Lastly, we will go to gold. What is our friend gold doing? Gold up for the day. You see this line at the bottom of our gold chart. I will tell those that are listening to audio only, around $100 or so is where gold bottomed out and really refused to go below. Some say gold is going there and maybe lower. Gold was actually up for the day on Monday, half a percent. Half a percent. So we've got a little bit of a green candle on the 2-day chart. Gold still in a confirmed down move. And of course, that upward movement has not gotten it up above the confirmed down trend line, waiting to see if that's going to cross over going up or not. And of course, if we look at our 2-hour chart, what do we see in gold? Well, it sure enough did cross over, but a 2-hour trend line crossing over when we've got strong downtrends on both our weekly and our 2-day chart does not mean that we've got significant up movement. If you remember, our 4-hour chart has really not been working for us. If it starts working again, we're just going to use that for gold. But toward the end of the year, last year it stopped working, and it has this year also. So that is where we are as we end the day, as we start with our new charts and the exciting possibilities offered to us by our vertical crossover lines. We'll continue our training in that, but I really want you to go listen to that training. You will be excited with what you see, and as you start practicing and your understanding increases, hopefully you'll get more and more excited about it, and it will help you even better, even more, as you learn to read these charts, because they are just your gift. If you can learn to read these charts, it's like having the Wall Street Journal a day in advance, or a week in advance, or a month in advance. It's all about training. And to supercharge that training, you need to be doing your daily market worksheet with us every single day. You also need to have the layout that we use at freestockcharts.com, and you need to view our video, How to Read a Stock Chart. All of those things are available for free if you go to chartingwealth.com and sign up. When you sign up, you'll receive every day the videos that we do, all the trainings and the daily videos and the comprehensive weekly video that we do once a week, and you'll be able to start yourself on your way to becoming a charting master. This is what it's really all about. Thank you so much for being with us. You want to help us out? Go to our website, sign up, of course, for the email. Go to iTunes, sign up, and subscribe to our podcast. Give us a 5-star rating. Say something nice about us. You can also do that at Facebook, Instagram, and, of course, YouTube, where you can subscribe to our channel. We appreciate you so much being with us. God bless. Take care from chartingwealth.com.